Hello again, welcome to another episode of the Uranium Market Minute. Today is Thursday, March 3rd, and this is episode number 86. My name is Justin Hune. I am your host. I'm the founder and publisher of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. As always, before we get into today's video, nothing in this video is intended to be investing advice. I'm not your financial advisor. This is not financial advice. Please always do your own due diligence when it comes to investing, and always take responsibility for your own choices. Thank you so much again for being here. I really do appreciate each and every one of you. If you do enjoy this, the Uranium Market Minute podcast, please subscribe to the channel, like this video, hit the notification bell, and you will be reminded whenever we publish a new episode, which is almost every day. Now, I skipped yesterday's Market Minute. I was exhausted from putting out the March Uranium Insider Pro newsletter, and just needed to take a day off from the podcast. So much is happening in the market, so there's so much to talk about. I'm going to try to not run too long today, but there's some important developments happening in the market that I think are worth mentioning. I'm going to go ahead and just jump right into the daily scoreboard here. We'll run through the spot price of uranium, the spot flows, the ETF flows. We'll look at the charts, of course, and then I'm going to discuss some events that are happening in and around Kazakhstan and related to the situation in the Ukraine with the Russian invasion. Jumping right into the spot price of uranium, still at $50.75 a pound, flat from yesterday, although yesterday it did move up quite nicely throughout the day. Looks like the volumes are slightly lower today. However, yesterday's spot did come in again pretty heavy, purchased another 500,000 pounds of uranium, and we raised another $23 million. So they now, year to date, have purchased 8 million pounds in just over 8 weeks. Just astonishing. They've raised 436.7 million year to date through their ATM financing vehicle that they issue shares into the open market when they're greater than 1% premium to NAV. They closed yesterday at 1.28% premium to their net asset value. And today the trust is actually trading up slightly with the spot price flat. So they are in that range again to be issuing shares into the market, although the volumes are a bit lower today. So let's see, year to date, we already covered that. They currently are sitting on 86 million in cash, which is just about enough to buy a little bit more than 1 million pounds, considering that they'll probably keep about 30 million in their treasury as a buffer. As of yesterday, they are sitting on almost 50 million pounds of uranium, 49.3 million. They've raised 1.45 billion through their ATM since August of 2021. Their NAV now sits at 2.57 billion. Now, this NAV is approaching the NAV of their other trusts, their gold, silver, platinum, palladium trusts. And in my opinion, the uranium trust is going to overshoot the NAV of their other vehicles, which is astonishing, especially how fast this has happened. It's happening so quickly, and we're actually seeing considerable investing flows come into this vehicle. Something that I wanted to mention, I know I've talked briefly in the past about the importance of liquidity, but what happens when this vehicle continues to grow is that opens up investment opportunity for other large institutions. If you are an institution managing hundreds of billions or potentially into the trillions, nothing matters more than liquidity. And if you are an institution that has that type of AUM and you're wanting to position in uranium, well, what are the options? The options are the ETFs and the spot trust. What is the safest option? The spot trust. So if you have a relatively stable vehicle that is tracking the commodity, which is probably the safest way to play this investment, and is also the most liquid vehicle in the space, that is exactly what they're going to pile into. And we're seeing the beginnings of that. And we are expecting, of course, that they will receive that NYSE listing, but clearly institutional investors are not having a problem finding it on the TSX, looking at the types of numbers they've been able to raise so far. So also on that note, while we're talking about Sprott, I've mentioned multiple times over the past couple of months about Sprott's taking over the URNM ETF, and that is still on the table. However, the shareholder vote did not reach quorum in February. There were not a high enough percentage of shareholders that actually placed their vote. They and I are highly confident that they will have sufficient yes votes to actually take over the vehicle, but they need to have enough votes, period. So if you own URNM, please vote on this. You should have, if not, paper documents mailed to you over the past couple of months, you should also have an email check your spam folder. A number of URNM holders have said that they've found the email leading them to where they can vote on this matter in their spam folder. So please look for that if you are a URNM holder. We need to get to that quorum in order for the yes vote that is expected to actually make this happen. So we wanted to do a little housekeeping on that matter. And looking at the ETFs, they continue to grow. URA again reported a very large issuance, 1.3 million shares issued yesterday by URA. URNM reported no change in outstanding shares. Again, a new all-time high, of course, in the combined outstanding shares of these two vehicles. Yesterday's share issuance from URA gave rise to 22.2 million in new mandated buying. So the flywheel effect is in full effect here. Again, this is just exactly what we want to see in the bullish side. And of course, when the sector was contracting, we didn't see outflows in a meaningful manner. In fact, we saw inflows. So that was a huge tell for us. And I mentioned that multiple times throughout the month of January and into early February, that the sector, as it was contracting, the inflows were happening in the ETFs, which is not something that you would expect. That was a big tell and gave us a lot of confidence to not only hold on, but add to positions. So looking at, let's see, year to date, URA's outstanding shares have increased by 8.4 million, URNM by 1.7 million. That's 281 million in mandated buying from the two ETFs year to date. So the ETFs have certainly helped, not hindered, the price action of the equities. And in my opinion, the equities are not pricing in the current situation. So I'm going to talk more about that in the mailbag section. Let's take a look at the charts. URA today down about 2% on the day. Seeing a little bit of dip buying happening, but not trading that strongly. The spot price has flattened out. And of course, anytime that you have big rallies in any sector, you'll see a bit of a little bit of profit taking. Either way, the stock is holding up quite well. Technically speaking, indicators are looking positive. We held that trend line, moving averages all moving up, trading above that 200-day. Still well within this Livermore accumulation cylinder, which I'm just going to leave on here because I think it's a pretty awesome sight to behold. Would like to see URA, of course, hold above that 200-day. And in my personal opinion, the equities are not pricing in what is happening in the uranium markets yet. Looking at the Sprott Physical Uranium Trust, printing a nice hammer today. Volumes are pretty low. However, it is positive on the day. And with spot price not moving on the day, they are now trading probably somewhere around 1.5% premium to NAV. So they're likely raising a bit more cash. However, the volumes are not huge, probably to the tune of 10 to 20 million, which I guess is still a decent chunk of money, right? Looking at Cameco, trading down on the day, about 2%. Again, just a little bit of lighter volume profit taking across the sector. Still absolutely gorgeous. Look at these smushed together moving averages, all moving up, trading well above the 200-day. Chart looks very strong compared to much of the sector, to be honest. And that might have to do with the market starting to price in an expectation that there will be increased utility interest looking west, considering what's happening right now in the Ukraine with the Russian invasion. So I want to, in the mailbag section, just talk briefly about what seems to be happening to the extent that we can get accurate information and how that might be impacting Kazakhstan and Kazatomprom specifically. Clearly, the market is pricing in some level of risk with Kazatomprom. I'm not going to talk about the stock. I'm not going to talk about whether or not we own it or recommend it. I'm talking about this because they are a major producer. And anything that happens to Kazatomprom, positive or negative, affects the sector. So talking about this is some of this is highly speculative. So this is obviously not advice. And I just want to make that ultra clear that it's difficult to get accurate information. But all of that said, and all of what I'm about to say doesn't really give you a sense of security about expectations going forward. Anything that is happening over there currently, all that is doing is essentially adding to whatever risk was already there as a jurisdiction. And so Kazakhstan is a very, very important jurisdiction for uranium. They produce about 40% of global uranium production, which is just an absolutely huge number. There's many important JVs, joint ventures with Kazatomprom, Cameco, Orano, Uranium One, CGN. These are all very, very big players in the space, and they all have JVs there because it's such a profoundly productive area for uranium. There's ISR production in Kazakhstan. It's very cheap, relatively speaking, to produce uranium in Kazakhstan. And that's one reason why uranium prices have been so low for so long, is because Kazakhstan production just ramped up, especially when it was 100% state owned and the Kazakhstan tenge was depreciating incredibly. So the costs for Kazatomprom are, generally speaking, in tenge, yet they sell their uranium in US dollars. So they were able to make a lot of money by producing heavily, even when the price continued to drop throughout the mid 2010s, which arrives us at this point in a fast rising price environment. And what we are seeing so far, that, of course, like I said, a lot of this cannot really be substantiated. So we're just going off of what we can see, what we are hearing from our contacts, from news flows, et cetera. It seems that Russia has made a request of Kazakhstan for military support, and they have declined that. However, literally 5 minutes before recording this, they're starting to see whispers around Twitter showing that they're seeing Kazakhstani tanks heading for the border. Again, I cannot confirm or deny this. I'm just letting you know what we are seeing and what we are hearing. Obviously, what Kazatomprom has mentioned over the past few months through their conference calls and through interviews that members of management have conducted over the past few months is that they have had supply chain constraints, like everybody has. And so that, of course, could affect their levels of production. A piece of news that came out yesterday was that Maersk, which is the largest container shipping company on the planet that deals with shipping Kazakhstan's uranium exports, they are saying that they will no longer ship to Russia. Now, it does seem that they are not cutting off shipments that are already booked, but they are not booking any new shipments to Russia. Kazakhstan does ship their uranium through Russia with their global shipments. And so there is some potential fallout from that. We do understand also, now Kazakhstan primarily is a U3O production, while Russia, their main uranium product is enrichment, and they provide enrichment throughout Europe, throughout the West, throughout the East. They are a huge, huge player with enrichment. So all of this is to say that because of Kazakhstan's location, because of their dealings with Russia in the past and presently, the unrest that happened in January was quelled in a very short period of time because Russia stepped in at Kazakhstan's request. That puts them in a very uncomfortable position now, with Russia currently doing what they're doing and requesting Kazakhstan's support. How this, I don't want to speak too speculatively on these things, but I'm here because of an investment, right? This is what we're talking about. And in my personal opinion, I don't think the market is pricing in the potential fallout from Kazakhstan's potential involvement in this mess. I think that it is huge. I'm not talking about the Kazatomprom stock, okay? And by all means, in the past few years, Kazatomprom has been an excellent company. They have done extremely well. They've provided very well for their shareholders. They've been very transparent, and they pay a dividend. It's a stock that is done really well, and the company has done very well. And it would be unfortunate if they did get intertwined into this just because of the actions of the state, but that's just how some of these things work. This is the year of geopolitics. This is happening. It's affecting commodities across the space, and uranium is part of that as well. So in my personal opinion, the equities markets and the price of uranium, even though it's run up pretty hard in the past week and a half, are not pricing in the potential for not only just Kazakhstan, but the knock-on effects of further sanctions on Russia. Now we're seeing that the US utilities are pressuring the US government to not sanction Russian uranium. I've been a pretty strong defender of the utilities. I think that they've gotten a pretty bad rap in the past few years, that the investment community continues to just kind of bang the table and say, well, you got what you deserve, fuel buyers. You didn't come to the table and pay a higher price when you had the chance. So now you're going to be short uranium 5+ years out. And not only that, you're going to pay through the nose for it if you need it in the next few years. I don't really carry that type of vitriol towards the utilities. I think that two things can simultaneously be true at the same time. I think that myopic thinking is dangerous in any realm. And that clearly has been the case over the past couple of years with what we've seen go happen across the globe. I won't get into that. But to say that the utilities are to blame for the rising price environment and they are getting what they deserved, I think is unfair. If you actually talk to a fuel buyer, they have constraints. Okay, while it's true that they could buy spot uranium, they could buy into carry trades, they could buy in the midterm from the Uzbeks, from the Kazakhs, from Uranium One, from Orano, etc., at a price that was substantially lower than what Cameco was asking for to bring on McArthur River. You can't, they could not, literally, they could not go and voluntarily pay $45, $50 a pound, lock in a long-term contract when they could buy it elsewhere for $10, $15 a pound cheaper. They literally were not allowed to do that by their management. No utility is going to take one for the team in order to get Cameco what they want and bring the market back into balance. That just couldn't happen. And it was ridiculous to expect the utilities to do that. But that also did create the situation that we're in, a very, very fragile market where something like this is a black swan, by the way. This Russia situation. This is an unexpected market implicating event. This is an exogenous event. And while we did not expect this particular event to happen, we absolutely expected something to disrupt this market at some point. It was way too fragile, way too reliant on a couple of jurisdictions, way too reliant on Kazakhstan for U3O8, and way too reliant on Russia for enrichment. And now both of these jurisdictions potentially have some hair on them. Russia, certainly. Kazakhstan is still speculative at this point, but it's, it's right up there. So that, all of that is to say that I don't know how this is going to play out. All I know is that everything that's happening now isn't helping the situation for the price of uranium, for security of supply for global utilities. Utilities, luckily, are sitting on a decent inventory. In the EU, they're sitting on 3 years. In the US, they're sitting on probably a little bit more than 2 years. And they've been able to bolster that inventory in the past couple of years, over many years, actually, buying in the spot and buying carry trade material. So all of that is to say is that this market is unbelievably fragile. And it doesn't look to me like this situation with Russia and Ukraine is going to end tomorrow or next week with a shake of hands and a peaceful resolution. I'm sorry to say that. It doesn't appear that that's the truth. And I don't feel good about what's happening there. I'm just trying to tell you what we're seeing, and that the potential for this to be a massive, massive black swan for the uranium space is absolutely there. And I think the early signs of it are there. So all of that said, again, like I said, my prayers are with all of the people that are involved in this conflict. The Russian people as well, the citizens of Russia are they're getting the short end of the stick. There is unbelievable financial sanctions happening against Russia. They're certainly going to affect the populace of the country. And if this goes on for a long period of time, that could create its own snowball in Russia in terms of, the populace rallying against the government. I don't know. This is all just speculation, but the ruble is tanking. Gosh, the RSX is just getting destroyed. I mean, it's just a mess, you guys. It's just a mess. So, but like I said, and I'm quoting again somebody from I'm forgetting her name. I apologize. UXC. They had a presentation. John Quakes tweeted about it a couple of days ago at Quakes99 on Twitter. Some very interesting slides from UXC, and I'm not going to share them here, but I will just say that this is a primary nuclear fuel consultant that has been conservative for a very long time, and they're kind of raising the flag here and banging the table in terms of it's time to get serious about securing supply, and that this is the year of geopolitics. So with that said, it's a good time to be invested in the spaces that are going to benefit from this mess, because we're all paying more at the pump. We're paying more for food. I don't care what country you're in, you're paying more for everything right now. And one way to gain that back is to have some gains in investments and try to take care of your own finances and your families and your communities, et cetera. So this is one way the way that we can do it, by benefiting from what is going to rise, or if you're short, betting short on something that's going to fall. But I don't play the short game generally. what is going to benefit from these geopolitical events that we can't really control, but we have to live through. So we're going to do the best to live through them with abundance. And I hope that that what I've been doing with this channel, and if you are a member with our newsletter, of course, have been benefiting from that. So with all of that said, be well, and I will see you tomorrow. Take care. Cheers.